Friday, September 21st, 2018, Maneco 64, home of alternative economics and contrarian views. So the big, fat, ugly bubble, as Donald Trump called the stock market and the economy when he was campaigning, is continuing. Of course, you'll say that the reason the stock market has kept going up or has rebounded since he became president is because of his policies. But I don't think so. I don't think his policies have improved the underlying health of the U.S. economy. The only thing he's done, I think, and Congress is indebt the United States even more. And that's what's probably gone into the stock market. Government has grown. You have the government running deficits of $500 billion now a month. And it's probably going to be running like almost $2 trillion deficits in fiscal year 2019. So I want to talk about that, of course. I want to talk also this morning a bit about the Bank of China, the People's Bank of China. The ex-head of the People's Bank of China has warned that China could try to move away from the U.S. markets and the U.S. dollar. Before I go on about the Dow, which of course made an all-time high yesterday, and the Chinese official, I'll look at what the markets are doing this morning. A little later today, it's 9:09 a.m. London time. So we've got spot gold at 12.08, which is up about $1. It has been as high as 12.11 this morning, 12.11.50, and as low as 12.06. Yesterday was a bit of frustrating day for the precious metals because the dollar is very weak. And even though gold went up, it went up a fraction of what the dollar went down. But I think we need to look at that more as the relationship is not always perfect. It's not like, oh, the dollar index goes down 0.5%, the gold goes up 0.5%. Sometimes there's a lag. It's a little bit like the weather. You go out and it's supposed to be really sunny, and it is a little bit, and then there's some rain clouds go over and you get rain and sunshine at the same time sometimes. And that's the way, in my opinion, markets are as well. Anyway, silver is outperforming gold this morning, which is a good sign. But still, of course, with a 14 handle, we're at 14.37, up 6 cents. The high today has been 14.44 and the low 14.29. Again, higher highs every day this week. Good sign for silver. The Dow, well, here we go. Well done, Dow. and I have to admit, I was wrong. Earlier this year, I said I didn't think the Dow would, the top in January 2018 was going to be the all-time high. And yeah, I have to admit I was wrong. No one's ever always right. Even Charles Nenner is wrong because he said bonds, the bond markets were going up and that he was buying bonds the last time I heard him. And at the time, the yield was at 285 and now we're at 307. So the bond market has gone down. So not everyone gets everything right. We can only work on probabilities. Am I long the Dow? No, I'm not long the stock market. It's not really a game I played. I had a pension in the 90s to early 2000 that invested in stock markets. But after the 01-02 crisis, I stopped putting money into that and I switched the funds around. But that's the way it is. I mean, I'll look into the headlines after I go through the prices and the charts. So the S&P, of course, is up as well this morning, up 0.25% at 29.38. The NASDAQ 100 futures up 0.5%, up 32. So what you've got now is basically greed taking over. And I'll show you the chart of the Dow in a minute. You've got greed and people rushing to buy it just because it's going up, not because of any fundamental value. So the pound today has come back down. It was very strong yesterday, so we're now down 1/3% this morning. The pound 132.24. The euro fairly strong, still almost up to 118 now. It's 117.78, unchanged though. And the dollar slightly stronger against the yen. Seems like every time the dollar gets hammered a lot against the major European currencies, that the yen holds the fort, so to speak, for the dollar. The dollar keeps fairly strong against the yen. It's up 0.2%. What about Chinese currency? Well, yeah, the dollar's come off a little bit. It was about 686 yesterday. Right now it's 683.40. So the dollar's come off against the yuan as well. Oil price still above 70, WTI at 70.30. I saw that President Trump is trying to tell people, the OPEC, oh, your prices are too high. He's a real character. I mean, I know the U.S. protects Saudi Arabia militarily, but he wants to have his cake and eat it. We've got this big bubble here. Why doesn't he tell the, Wall Street to keep stock prices lower? It's the same thing, Why is it? What is it any different that prices of companies can go up in the U.S. like a bubble, but when the oil price goes up, he gets all like, "Oh, this can't continue. This can't keep going up." Well, what about people who want to invest in companies? They're getting a hard, a bad deal here because the prices keep going up. Do something about it, Mr. Trump. Bring the stock market down so people can invest and get a good return, because right now they can't. So it's just like, I think it's just trying to placate the public and say, I'm trying to do something about it. But it's all about inflation. I know the Fed's been raising rates, but I think they left it too low for too long. And what we're getting here is too much money out there created out of thin air. And it's a big, it's the mother of all bubbles. And I'm just going to watch from the sidelines. I think that's what I'm going to do. I'm not advising anyone to do anything. It's up to you to decide. So what else? So let's go into the stock market. Let's have a look at what's going on. And this is the kind of news we got overnight. CNBC, the Dow just triggered a chart signal that could mean 6 to 9 months of higher prices. Dow rallies more than 250 points to first record close since January. So there you go. What about this trigger that CNBC talks about? Well, I'll show you. I spoke a few days ago. Is speculators, traders, whenever we break an old high, which was the end of January 2016, we got up to around 26,600. So yesterday we broke through that level, and it's triggered that. So all the momentum traders are going to come in and buy that. And I mean, we could really easily go up into the 30,000s. Or, of course, this could be a false breakout. You never know. That's why markets are so tricky and difficult. But I would speculate that it's going to go a lot higher. I think the public is going to come even in a bigger way now. And a lot of this money, don't forget, is on margin. It's not like people are buying $100 worth of stock with $100. No, a lot of them buy $1,000 worth of stock with $100. They're leveraged. So that's the real danger here. And that's always, leverage and debt is always at the heart of financial crisis, collapse, stock market crashes, because on the way down, that leverage works in a vicious fashion because you have to get out or else you're going to owe more than you put in. So be careful with that. So S&P, of course, had already made a new high earlier than the Dow. So now that's been confirmed, which is a good sign as well. Technically, the NASDAQ, the same story. I mean, so now the Dow is confirmed, the NASDAQ and the S&P. One thing I like to say though about the Dow, it's it's an index of 30 blue chip companies, and as you look here, these companies haven't been in the index forever. For example, Walgreens Boots Alliance has been in this since 2018. Apple has been in the index since 2015. Goldman Sachs since 2013. Nike since 2013. So what I'm trying to say, yes, the Dow's done well, and someone might say if you bought the Dow in 1929 and you held it till now, you're doing well. But they're components. They're different companies. So unless you're a very rich individual who has someone managing your money and always rebalancing or changing your portfolio, it's very difficult to track the Dow. Unless, well, nowadays you get indices, futures, but it's not really owning a company. And that's what I'm trying to say. Yes, it has gone up, but the Dow, the index has been changed many times. So is it really a reflection of the economy over time? Well, that's for you to decide. While if you hold gold or silver, it's the same, forever. And I'm not saying gold and silver are investments; they're money, of course. So that's where the stock market is. Some of you might be asking, what about the bond market? Yields are going up. How come the stock market is going up? Well, if you look at beginning of the year, yields, the 10-year yield was at 240. And then in January, beginning of the year, and then we got up towards the end of February, we got up to 295, and actually that was the time when the stock market was going up at that time. Yeah, it was going up at the time, so the stock market and yields were going up together. Maybe people getting out of the bond market into the stock market, but then it was then that people realized, wow, we got to get out of the stock market as well because yields are going up. So right now it's the same thing. Since about a month ago, the yields bottomed around just above 280, and now they're at 307, and the stock market has been going up. But so maybe we're going to see the yields and the stock market going up together. Some people might say that yields going up is a good sign that the economy is doing well, the stock market is doing well. We'll have to see. Now, People Banks of China had warns China's exporter could soon ditch the U.S. Doesn't say the U.S. dollar, but basically, eventually it would be the U.S. dollar. So, Xu Zhoushuan, he was the head of the PBOC for 15 years, I think, or so. And he left early this year, and he's just saying that with the trade wars and China could shift away from just the U.S. markets and shift its economy more towards the the One Belt and Road Initiative, or BRI, and that these countries in this potential economic system, 21st century Silk Road, could start shifting away from the dollar to the yuan, or even other currencies within there, maybe the euro. This is what he says here that's quite interesting. So, and I quote, "So if the other currencies have some problem, the global market may decide to use more RMB." Another interesting quote he made, and I think this is what could surprise a lot of people, especially people like Jamie Dimon, who I think a few months ago said that it would be decades until the Chinese currency would become very important. And so I quote the Mr. Xiao Xuan. He says, "I think the speed of diversification or geographical diversification can be relatively fast and beyond many people's expectations. More signs that the world will be moving away from the dollar, relatively speaking. The dollar will be still important." So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. Make sure you click on the little bell to get notified of my new videos. You can also follow me on Steemit, DTube, BitTube, and on Twitter. So I'll talk to you later. Take care. Bye.